All right, so looks like we're tackling household help today.
Oh, yeah. Big stack of IRS publications here.
Publication 926 specifically, right?
That's the one. All about those household employment taxes.
Hiring someone to, help out around the house can make life so much easier.
For sure.
But the IRS definitely has some thoughts on the matter.
Oh, they definitely do, yeah.
So that's where we come in, right? We're going to try to help you navigate all this
Break it down.
and maybe uncover some surprising facts along the way.
You never know what you'll find in these publications.
So first things first, how does the IRS even define a household employee?
Right.
Is it just anyone I pay to do work in or around my house?
Well, not exactly. It's actually a bit more nuanced.
Okay.
It really comes down to control.
Control. Okay.
Yeah, like does the person hiring control what work is done and how it's done?
So, like, if I'm telling my babysitter exactly what to do,
Exactly.
like, bedtime routine or reading specific stories.
That definitely points towards them being your employee.
Okay, that makes sense. So it's not just about the location of the work, but like the level of direction I'm giving.
Right.
What if I hire someone who runs their own business?
Okay.
Like a lawn care business. They're working at my home,
Yeah.
but they're the ones making all the decisions about how to do the job.
Yeah. In that case, they're considered self-employed, even though they're mowing your lawn.
Ah, interesting.
Yep. They're providing a service, setting their own rates.
Right.
Probably have other clients, too.
Makes sense.
That independence is key.
Okay, so let's say I found this, amazing person to help with the kids and they pass that control test.
Right.
What's next?
Well, before we even think about taxes,
Okay.
there's one crucial step,
Oh.
making absolutely sure they can legally work in the U.S.
Right, of course.
This is where Form I-9 comes in.
Oh, yes, I-9. I've heard of that.
Yeah. Have you had to deal with it before?
Not personally, no.
So basically, it verifies both their identity and their work status.
Actually, both of us have to fill it out.
Both you and the employee got to fill it out. No skipping allowed.
The IRS is serious about this, huh?
Oh, yeah. Very serious.
Yeah.
Proper documentation protects both of you.
So I-9, that's step one.
It is.
Are there any other tools or resources to help with that verification process?
Absolutely. The Social Security Number Verification Service,
Okay.
or SSNVS.
SSNVS, got it.
It's a great resource. You can do it all online.
Nice.
Helps you confirm that the name and Social Security number on the I-9 actually match up.
That's helpful. So does that mean we're good to go? Like work permit-wise?
Well, a valid Social Security number doesn't automatically mean someone's authorized to work.
Ah.
That's where E-Verify comes in.
Another one?
Yep, another online tool. But this one specifically checks work authorization.
Got it. So I-9 first, then double-check using SSNVS and E-Verify.
You got it.
Okay. So we've established they can legally work.
Right.
Now let's talk taxes.
Let's do it.
Is there like a certain amount I pay someone before I have to worry about all these employment taxes?
Yeah, that's a good question. So there are actually two key thresholds to keep in mind.
Okay.
The first is for Social Security and Medicare taxes.
All right.
If you pay your household employee $2,800 or more in cash wages during 2025,
Okay.
those taxes kick in.
So does that mean, like, if I'm just hiring someone to, like, mow the lawn a couple times, I might not even hit that?
Exactly. Someone just doing some casual work a few times might not even reach the limit.
Okay. Interesting.
The second threshold is for FU tax.
FUTA.
Stands for Federal Unemployment Tax Act.
Okay.
And the amount is lower for this one.
How much lower?
If you pay $1,000 or more in any quarter of 2024 or 2025,
Oh, wow.
you'll owe FUT tax.
So even if I don't hit that $2,800 for Social Security and Medicare, I might still have to deal with FUT.
That's right. Got to keep track of those cash wages all year round.
All right, so this is already more complicated than I thought.
Yeah, it can be.
Are there any exceptions to those thresholds, like based on who I hire?
There are some interesting ones.
Okay, tell me more.
So, for instance, wages paid to your spouse,
My spouse.
your child under 21,
Okay,
or your parent
okay.
usually don't count towards either threshold.
So if my teenager's helping out around the house, I don't have to worry about those taxes.
Well, it depends on how old they are and what kind of work they're doing.
How so?
If they're under 18, the IRS looks at whether household services are their principal occupation.
Oh,
So a student helping out during the summer probably wouldn't qualify,
right.
but a full-time chef would be a different story,
Okay, so summer help is probably fine.
most likely.
What about that parent exception you mentioned?
Oh yeah, the IRS gets very specific with that one.
How so?
So if your parent is caring for your child under 18,
Mm-hmm.
or a child with a disability requiring constant care and you're divorced, widowed, or have a spouse unable to provide that care,
Okay.
then their wages do count towards Social Security and Medicare.
Wow, they thought of everything.
They try.
Okay, so let's say I do hit these thresholds. How do Social Security and Medicare taxes actually work?
All right, so for 2025, both the employee and employer pays 6.2% for Social Security.
Okay.
On the first $176,100 of wages,
Right.
Medicare is 1.45% each,
Right.
with no wage limit.
So is that a total of like 15.3% coming out of each paycheck?
Almost. There's also an additional 0.9% Medicare tax for employee wages over $200,000 in a year.
Oh, wow. So hiring nannies have a whole other set of tax rules.
That's right.
Okay, and as the employer, am I responsible for both my share and my employee's share?
You are, unless you decide to pay theirs yourself.
Ah, so I have the option to either withhold their share from their wages or pay it out of my own pocket.
Exactly.
That's good to know. You mentioned earlier that non-cash wages,
Mm-hmm.
like, providing meals or a room, don't count towards those Social Security and Medicare thresholds,
Right.
but could still be subject to income tax.
Potentially, yes.
How does that work?
Okay, so imagine you have a live-in nanny
Okay.
who receives a room and meals in addition to their cash wages.
Mhm.
Those perks aren't counted towards the Social Security and Medicare wage limits,
Okay.
but they could be subject to income tax unless a specific exclusion applies.
Are there any exclusions I should know about?
There are some interesting ones.
Like what?
For example, qualified transportation benefits,
Like what?
like providing parking or transit passes.
Okay.
Those can be excluded from income tax up to a certain amount.
Interesting. So even though those benefits aren't part of the Social Security and Medicare calculation,
Right.
I still need to keep them in mind for income tax purposes.
Yeah, it's all connected.
Okay, all right. So let's talk about this FUTA tax.
Oh, okay.
What's the purpose of that one?
So FUTA stands for Federal Unemployment Tax Act,
Mm-hmm.
and it funds unemployment benefits for workers who lose their jobs.
Oh, so it's like a safety net?
Exactly.
Okay, but if I'm not planning on firing anyone, why am I paying for unemployment?
It's a system where everyone contributes to provide that safety net for all eligible workers. Good news is, as an employer, you're only responsible for paying the FUTA tax, not the employee.
Okay, that's a relief. What's the FUT tax rate?
The rate is 6% of the first $7,000 of each employee's wages.
Okay.
However,
Oh,
there's a potential credit of up to 5.4%.
a credit.
Yep, which can bring your net rate down to 0.6%.
Wow, that's a big difference. How do I make sure I qualify for that?
The key is staying on top of your state unemployment taxes.
Oh.
If you pay those on time, you can usually claim the full credit.
So it's like a reward for being a responsible employer.
You got it.
All right, so we've covered Social Security, Medicare, and FUTA.
We have.
What about federal income tax? Do I need to withhold that from my household employee's paycheck?
This one might surprise you.
Okay.
You are not required to withhold federal income tax for household employees.
Really?
It only happens if they specifically request it, and you agree.
Wow, that is surprising. Why would they ask for that if it's not required?
It can help them avoid owing a large sum of money at tax time.
Ah, that makes sense.
If they do want you to withhold federal income tax, they'll need to give you a Form W-4.
Interesting. I'll have to have that conversation with them. Anything else I should keep in mind if we go that route?
Yeah, we need to talk about the Earned Income Credit.
The EIC, right?
Yep.
That's a tax credit for lower income workers.
Exactly. And it can significantly reduce their tax liability or even result in a refund.
Okay.
So if you are withholding income tax for them and the tax tables show that no tax is due, you must provide them with a notice about the EIC.
Why is that notice so important?
Well, because the EIC could mean they get money back even if they don't owe any taxes.
Oh, okay.
So the notice just makes sure they know about that potential benefit.
Makes sense. Should I give them the notice even if I'm not required to?
It's always a good practice, especially if their income is below certain thresholds.
Right.
Better safe than sorry.
Definitely. Okay, so we've gone through all the potential taxes.
We have.
What forms do I need to have ready for tax season?
All right, so first you'll need an employer identification number,
Employer identification number.
or EIN.
EIN.
Think of it like a social security number, but for your household as an employer.
I don't think I have one of those yet. Where do I get that?
You can apply online on the IRS website. It's a pretty straightforward process.
Okay, great. And then what?
You'll also need Form W-2, which reports your employee's wages and any taxes withheld during the year.
When is that due?
You'll need to provide copies B, C, and 2 to your employee by February 2, 2026.
Okay.
And send copy A with Form W-3 to the Social Security Administration by the same date.
Got it. Are there any cases where I wouldn't need to file a W-2?
If you didn't withhold any federal income tax and their Social Security and Medicare wages were under $2,800 for 2025.
Okay.
You don't need to file a W-2, but it's still a good idea to give them a receipt for their services.
Oh, that makes sense.
Yeah, that way they have a record for their own tax filing.
Good point. What about reporting my tax responsibilities as the household employer?
That's where Schedule H comes in.
Schedule H.
It's your one-stop shop for reporting all the household employment taxes you owe.
So Social Security, Medicare, FUTA, and any federal income tax withholding.
All goes on Schedule H.
I attach that to my 1040.
Exactly when you file your own income tax return.
And that's due.
April 15, 2026.
Okay. What if I don't have to file a regular tax return for some reason?
You've got options.
Okay.
You can file Schedule H on its own, or if you already have employees and are reporting taxes for them, you can include your household employees' information on those forms.
Okay, so there's some flexibility there. Last question. What about record keeping?
Oh, yeah.
What should I be keeping track of and for how long?
Good record keeping is crucial.
I bet.
You should keep track of dates, worked wages paid,
Both cash and non-cash.
both cash and non-cash, any taxes withheld, and your employee's Social Security number.
Sounds like a lot of paperwork.
It can seem that way,
Oh,
but trust me, organized records make tax time so much less stressful.
sure.
The IRS recommends keeping these records for at least 4 years.
4 years. Okay. I'll make sure to create a dedicated file for all of this. This has been so helpful.
Glad to hear it.
I feel much more prepared to navigate this whole household employment tax thing.
Awesome. But hold on, there's more to come.
There is.
Oh yeah, this is just part 1 of our deep dive.
All right, bring it on.
We'll be right back with part 2.
Okay, so we just covered a ton of information about these household employment taxes.
We did.
I'm feeling a lot more confident about the whole process.
Yep.
But you know what happens if I mess something up?
Happens to the best of us.
Right, nobody's perfect, and these tax forms can be pretty confusing.
Oh yeah, for sure. But don't worry.
Okay.
The IRS has procedures in place for fixing those errors.
Ah, okay, so there's hope.
There's always hope.
So what do I do?
Well, it depends on whether you filed Schedule H with your Form 1040 or as a standalone return.
Okay, so let's say I filed it with my 1040,
Okay.
and then later I'm like, oh shoot, there's a mistake. What then?
You'd file Form 1040X,
1040X, okay,
which is the amended U.S. individual income tax return.
got it.
And you'd attach a corrected Schedule H to that form.
So it's like hitting the undo button on my taxes.
Exactly. You're basically revising your original filing.
Makes sense. What if I filed Schedule H separately?
In that case, you'd file a new standalone Schedule H
Okay.
with the corrected information.
Yeah, just send that in.
Yeah, but make sure to mark it clearly as corrected at the top,
Okay.
along with the date you found the error.
Got it.
Oh, and you'll also want to attach a separate statement explaining why you're correcting it.
So they know I'm not trying to pull a fast one.
Exactly, just being transparent.
So 2 slightly different processes depending on how I filed originally.
Right.
Okay. Anything else I should know about fixing errors?
Yeah, timing matters.
Oh, of course.
If you owe the IRS money,
Uh-huh.
you got to file that corrected Schedule H by the due date of your next tax return.
No grace period there?
Not really. But if it's an overpayment,
Oh, okay.
you have more time.
And how much time?
Generally within 3 years from the original filing date, or 2 years from when you paid the tax.
Whichever's later.
Exactly.
Got it. So act quickly if you owe money, but a little more breathing room if you're getting a refund.
That's the gist of it.
Okay, so we've been focusing on my responsibilities as the employer.
Right.
What about the employee?
Oh, yeah.
What do they need to know about all of this?
Well, they have tax obligations, too.
Right, of course.
We talked about the Earned Income Credit, or EIC, earlier.
Right, the tax credit for lower income workers?
Yep. And as an employer, it's really important to make your employee aware of that potential benefit.
Totally. You mentioned some specific situations where I'm required to actually give them a notice about the EIC.
Right. Can you remember what those are?
I think it was if I'm withholding federal income tax from their pay
That's what?
and the tax tables show that no tax is due,
You got it.
then I have to give them a notice about the EIC.
It's crucial they know about this credit.
Huh.
Could mean a refund even if they don't owe any taxes.
So even if I'm not required to give them the notice, it's probably still a good idea, right?
I think so, especially if their income is below those certain thresholds.
Just to be on the safe side.
Exactly.
Hmm.
It empowers them to make informed decisions about their own taxes.
Okay, so we've talked about correcting errors and making sure my employee knows about the EIC. Anything else?
Have you heard of publication 15T?
15T, not ringing a bell.
It's a handy resource for both you and your employee.
Okay.
It includes those federal income tax withholding tables.
So the ones I'd need if I'm withholding income tax from my employee.
Exactly. It gives you step-by-step instructions on how to calculate the withholding.
Based on their W-4.
And what they earn.
Sounds pretty helpful. Is that available online?
You can find it on the IRS website.
Okay, great, along with probably a million other publications.
Probably.
Okay, we've touched on record keeping from my perspective.
Right.
What about record keeping for the employee?
Ah, good point. They should be keeping track of their work hours and earnings.
Like what specifically?
Things like dates worked, hours worked, and the type of work they did.
Okay, why is that so important for them?
It helps them accurately report their income when they file their taxes.
Right.
Plus, it comes in handy if there's ever a question about their earnings.
So having good records protects everyone.
Exactly. And just like with your records, it's generally a good idea for them to keep these for at least 4 years.
Okay, so we talked about how I can provide those transportation benefits like parking or transit passes. Anything my employee needs to know about that?
Well, remember, you can provide up to $325 per month each for parking and transit passes in 2025.
Okay.
Anything beyond that would be taxable income for them.
Right.
So they should be aware of those benefits and how they might impact their taxable income.
So it's like a win-win. They get help with commuting costs, and it might even lower their tax liability.
Exactly.
Okay. We talked about the FUT tax credit earlier.
Yeah.
The rate is 6%, but I can usually reduce it to 0.6%.
By paying your state unemployment taxes on time.
Right? Does my employee need to know about this?
While they don't pay EFE tax directly, it's good for them to understand how that credit impacts your tax obligations as their employer.
Just creates a more open working relationship.
For sure, transparency is key.
This has been so helpful. I'm starting to feel like a household employment tax expert.
That's the goal.
But I know there's more to come, right?
Oh, yeah, we're just getting started.
What's next?
We're going to explore some unique situations, like scenarios where both you and your employee could be considered employers by the IRS.
Wait, what? How is that even possible? I'm the one hiring them.
It all comes down to those third-party pay arrangements we mentioned earlier.
Like payroll services and stuff.
Exactly.
Yeah.
Buckle up. It's about to get a little more complex.
Okay, we're back for the final part of our deep dive into this whole household employment tax thing.
Time to wrap things up.
You mentioned it was going to get a little more complex.
Oh, yeah. Things can get a little wild.
All right, I'm all ears. Lay it on me.
All right, so we've been talking about your responsibilities as the employer. But sometimes both you and your employee,
Both of us.
yeah, could be considered employers by the IRS.
Hold on, I'm the one with the job opening. How is that possible?
It all comes down to those third-party payer arrangements we touched on earlier.
Like if I use a payroll service.
Exactly, like
Yeah.
a Certified Professional Employer Organization, or CPEO.
CPEO.
Yep. They handle things like paying your employee, taking care of tax reporting and payments.
Oh, that sounds pretty convenient.
It can be. But here's where things get interesting.
Okay.
When you bring in a CPEO, they basically become the employer of record.
For tax purposes.
For employment tax purposes, yes.
So even though I hired the nanny, the CPEO is considered their employer.
In the eyes of the IRS, yes.
Okay, but you said there are some cases where I might also be considered an employer.
Right, even with the CPEO.
Now I'm really confused. How does that work?
It's all about this co-employment relationship between you, the CPEO, and your employee.
Co-employment.
Yeah, and the specifics can vary depending on the contract you have with the CPEO.
So I could be responsible for some employment taxes even though I'm not directly paying my employee.
It's possible, which is why it's so important to carefully review that agreement with the CPEO.
And make sure I understand who's responsible for what?
Exactly. Dot your I's and cross your T's.
Okay, so we've been talking about federal taxes this whole time. What about state taxes?
Ah, yes. State taxes.
Oh, those pretty similar.
It's a whole other ballgame, and there's no easy answer.
Why not?
Because each state has its own set of rules.
So even if I'm on top of the federal requirements, I still need to do my research for my specific state.
Absolutely.
Do states have like similar thresholds and tax rates, you know, for things like Social Security, Medicare, and unemployment?
It varies.
Yeah.
Some states might be similar to the federal guidelines, but others have totally different systems.
Oh man, this is getting complicated. Where can I even find information about my state's requirement?
Good news is the U.S. Department of Labor has a website
Okay.
that lists all the state unemployment tax agencies. You can find their contact info there and reach out to them directly.
All right, I will definitely be checking that out. Any final words of wisdom as we wrap up here?
Remember Publication 926.
Ah, yes, our old friend.
It's your go-to guide for navigating all of this. It covers everything we've talked about and so much more.
I'm starting to think of it as the household employer's Bible.
Read it carefully,
Right.
highlight the important stuff, and keep it handy.
Good advice. All right, well, this has been quite a journey.
You have.
We've covered so much ground.
From defining a household employee
To those crazy co-employment situations.
and even those state-specific considerations.
Exactly. Hopefully our listeners are feeling more confident and prepared to take all this on.
I hope so too.
I know I do. Thanks for being such a great guide through all of this.
Happy to help. And one last piece of advice.
Right.
If you're ever unsure about something, don't hesitate to reach out to a tax professional.
Oh, yeah, good point. They can help you dot those I's and cross those T's.
Exactly. All right. That's it for this deep dive.
Until next time, keep exploring, keep learning, and happy hiring.